We're still working on closing that gap. We're likely not done with that. To close the 200-day moving average, of course, is going to pull us down to around 4,700 by the time we get there. So there is risk to the downside. Don't think that we're completely out of the woods just yet. So here's what you need to know before the bell. Markets had a very nice sell-off. We had talked about previously for like 2 months. It kind of got to, I'd say, just kind of ad nauseum every day. It was like, hey, market's rallying, we're very overbought, take profits, reduce risk, rebalance your portfolio. Now, none of that meant sell everything and go to cash, right? It just meant, just be a little bit prudent about your risk management, etc. Because we said, look, a 5 to 10% correction is going to be very possible, in the coming months, just because we've gotten so deviated from the 200-day moving average. That was one of the kind of the big issues, is just this deviation that you had from the 200-day moving average has to close. And we're still working on closing that gap. We're likely not done with that. To close the 200-day moving average, of course, is going to pull us down to around 4,700 by the time we get there. So there is risk to the downside. Don't think that we're completely out of the woods just yet. But again, we did have a 5.5% correction from the peak. So, if we're going to be talking about, 5 to 10%, we hit that first mark. That was the 5.5% correction to that 100-day moving average. So we've completed potentially the first leg of that. We're now going to get this kind of reflexive rally, and that's what we saw here over the last couple of days. We talked about, hey, you get a rally back towards this 50-day moving average, which we got close. We didn't quite get there, but we had this reflexive rally that reversed some of that really oversold condition in the market. We have not turned up onto a MACD buy signal yet, so we don't have it all clear yet to put a lot of equity exposure back into the markets just yet. And yesterday, both Meta, Facebook, and IBM kind of pooped the sheets, so to speak, in terms of earnings. Really interesting, Mark Zuckerberg, actually earnings for Meta were okay. Nothing wrong with earnings coming out of Meta yesterday. But Mark Zuckerberg went through everything that he could find about how they just burn cash. And, it's like, we've just got a big furnace over here. We're just throwing cash into it left and right. Markets didn't like that. Meta's going to be down about 12, 13% this morning, maybe a little bit more. Futures are pointing lower because Meta is such a big component. IBM, also consulting revenues dropping rather sharply for IBM. That's leading to a big decline in IBM shares this morning. So that's going to weigh on the Dow because IBM is still a component of the Dow. So, you're looking at the S&P being down about, 0.5% or so this morning, about 34 points. The Dow is going to be down a couple of hundred points. So again, it's not dramatic, but very likely we're going to come down. And this is going to be the important thing. We're going to come back down to retest this 100-day moving average, that support. So if the markets can hold that level at the 100-day moving average, have a successful retest of that, put in a double bottom, then we're likely going to be kind of through this correction because, again, stock buybacks will come back in about about a week or so, but effectively about 2 weeks. Stock buybacks will really start to come back into the market, which have been gone now for the last month. So we'll get that reinvigoration of corporate share buying. That'll help kind of lift the markets once we get into May, June. So again, potentially a little bit more weakness here. Now, that's the optimistic view. The pessimistic view is that the market fails at that 100-day moving average, and we're going to test that 200-day moving average, completely close that deviation from the 200 days. So don't get me wrong, there is risk to the downside, but bullish sentiment, investor allocation sentiment is reversing sharply. We're about halfway through that sentiment reversal cycle, and retail net buying has already dropped back to the lows. Those normally suggest that we're likely closer through finishing this corrective process than not. But again, we got to navigate it. So just be a little bit cautious. Look for some opportunities. If you want to add some stuff to your portfolio, been looking for those opportunities. There's some stocks going on sale. That's okay. But be a little bit moderated with it and wait for this market to give us a little bit better signal before increasing exposures back to full weight. That's what you need to know before the bell this morning.